Hey guys, in this video we're talking about what I learned in my 20s about debt. There's going to be around 10 things. There's going to be timestamps in the description if you need. We're going to get straight to the point. Number one thing that I learned about debt is how it impacts your cash flow. Obviously, the more debt that you have, the more payments that you have, and that minimizes your cash flow. What you need is to maximize your cash flow, increase your income, and minimize your expenses. If you're able to pay off that debt, you no longer have the payment, you increase your cash flow. Cash flow is king, I will always say that. Sounds simple, yet people still overpay, overspend, and they have a lot of debt. And in doing so, they're not able to save for what they really need. Number two is debt steals from your future self. And unfortunately, I think a lot of people are learning this through student loans. They gather this debt when they're young, they're not really thinking, they go to college, and then their future self, they're starting their life, then they're realizing, holy crap, student loans are affecting me. They gotta deal with these payments, the interest rate is a little bit on the higher side. So now they have, their future self has to work to then pay off that debt. It's one of those concepts of like, you can either choose an easy life now, harder life in the future, or harder life now, easier life in the future. Like, sure, you could put things on credit cards. Sure, you could do a buy now, pay later loan, so you have to pay less today, but it's hurting your future self. Number three, I learned this when I was going for a mortgage, honestly, is how important interest rates are versus a down payment. So when I was looking to actually buy both, I originally had a townhome, now we're in a regular home as well, and I was discussing with the lender, like, what if I paid, like, put an extra few $1,000s down? And it didn't really impact the payment too much. Now, yeah, if you're comparing like a 5% cash down versus a 20% cash down, that could be a pretty big difference. But if you just have like a 10% down, and then you're like, well, what if I put like an 11 or 12 or 13 or even 15% down? It doesn't affect the payment very much. But if interest rates go down like 1/4% or 1/2%, that changes the payment drastically. Same thing could be for like a car loan. Yeah, down payment is important, but at the same time, so is the interest rate. Which could kind of lead to number four, is your credit score is extremely important. Seems simple, not a lot of people don't really care too much about it until it actually matters, because you only really need it when you're either going for like a house, for a car, for like a loan. Then you finally look back, if you don't have a good credit score, you're like, oh, I screwed up. And if you have that good credit score, you get better rates. Like what we just mentioned, if you're able to get a lower rate, that means a lower payment. Especially when you're young, make sure your credit score is good. Number five, I actually just had a video, but this is investing versus debt. And my video was talking about like how like making money, and how sometimes it just makes more sense to pay down your debt, especially high interest rate debt, versus investing. Because your interest rate is far greater than the return that you could get on an investment. And if you pay off your debt, that's a guaranteed return. You could check that video out if you're interested. Number six is kind of taking a higher level view, but it's your purchasing power. I'm talking about like national debt, like when we're talking about the Fed or the government and banks. There's how much debt out there? $37 trillion. Servicing the debt at this point is like $1 trillion, so it's just nuts. So as they print more money, your purchasing power, your dollars, lose value. Just look at the price of houses. Like before COVID, the average price of a home was what, $300,000? After COVID, it now is what, $400,000? That could be the same exact house, but it's worth much more. That's because the value of your dollar is going down. So it's an unfortunate truth that my kids are going to have to work harder than I am, because they're going to have a less valuable dollar when they grow up. I have to work harder than my parents, and my parents had to work harder than their parents, because over time, our purchasing power decreases, which is a separate topic all on its own. Just realize that every waking moment, your dollar and purchasing power is under attack. Number seven thing about debt is people use debt to conceal their financial problems. And I have so many stories. One I remember during COVID, I was just taking a walk and I saw an Escalade drive by with a Pizza Hut thing on their roof. And I'm like, well, they're delivering pizzas essentially just to pay for that car. I remember in college, there was some like career fair or whatever, and some people were talking about a recruiter, and they're like, well, he has a Beamer, so he must be successful, or he must have money. And to me, it's crazy to think like that. Like, I can go out and buy a Beamer or a luxury car, I could buy a bigger house, I could buy the latest technology, the latest fashion, use all this money, and I could seem that I'm successful. I have all of these things, but under the hood, how are you doing that? What, you're taking on debt, you have more payments, you have less money in your account. So in the background, you could be struggling. There's so many people that have they upgrade their car to a newer car, but they're actually struggling to make the payment, so they're not in a better situation. It seems like they are, but they're not. And you could do all of these things. You could max out your credit cards. You could take on all of this debt, and nobody knows, and it looks like you're fine until usually it's too late. So don't look at what people have, because that's usually not reality. Number 8 thing I learned about debt is credit cards versus debit cards. Now, obviously, yes, many people struggle having consumer debt. The interest rates are over 20-25%, and you're just never getting out of that. It's taking years and years to pay that off. And sure, there's cashback options. You can make a few extra bucks when you're spending on necessary purchases that you're going to make anyway. That's not going to make or break your life if you receive those cash back, but it's a good little bonus. But what credit cards have that debit cards don't have is if you buy something with a credit card, and let's say it's like a scam or fraud or something like that, you could go to the credit card company and they could actually protect you. A lot of cases you could get that money back because they're an intermediary between you and something else. Versus like a debit card or straight into your bank account, same situation, if you go through like a scam or fraud, good luck getting that back. You might have to go to like small claims court. It's just a little bit more risky in that part. So yeah, credit cards could be bad for a lot of people, but it does add extra security to your finances at the same time. So you need a good balance. You have to be responsible. Number 9, debt can eat you alive. When you always have that debt over your head, you have that payment every single month, you feel it. Mentally, psychologically, physically, it affects you. My wife had student loans, and we had payments of that, and it was just stressing me the hell out. And eventually, we did pay off a good amount of those student loans. We no longer have those payments. I could actually breathe. So it brings stress, that debt, to your life, to your family, to your marriage, with your partner, with yourself, with just everything. It's just added stress, and life alone is stressful. So if you're able to get out, that would help. If you're able to avoid getting in at the first place, that would help. And number 10, what I think the ultimate financial goal that we should all aim for is to become debt-free. It shouldn't be to become a multi-millionaire or billionaire or have this nicer house or nicer car. It should be eventually you pay all of that off and then you own everything that you have. You no longer have the payments and you have financial independence. You no longer rely on anyone. Think of this real quick. Think of all of your debts. Think of like your mortgage, your car, your credit cards, your student loans, and whatever other debt you may have. And all those payments, add all of those up. It's probably thousands of dollars. If all of that debt is paid off, then hey, you just freed up thousands of dollars. Now you have the freedom to choose and decide what you want to do with your money. That should be the goal. You now have the freedom. You can choose how you want to live. You're no longer in the debt. You're no longer a slave to anybody else. And if you have less debt, you could live on less, especially if you learn how to be happy and content with the life you currently have. And a little bonus tip, the government's not going to come and help you pay off your debt. They can't even pay off their own debts, given it was never meant to be paid off. That's a rabbit hole. But if you keep sitting around waiting for someone else to pay off your debts and it never comes, then guess what? You're still in debt. It's all up to you. There's just so much debt in this society. It's not going away. People struggle Like, the country's struggling. But hopefully these steps have kind of given you some knowledge that I learned in my 20s to help set your future up in a better way. I'm sure there are so many other things that we could also include. If you have any additional ones, you could leave them down in the comments to discuss. But thank you so much for watching, guys, and I'll see you in the next one.